Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today's Friday. It's Friday the 14th. It's about 7:48 in the morning, and we're going to be starting in just a second. Now, before we begin, some housekeeping. If you're watching on YouTube, like this video, subscribe to this channel, and please comment below this video, and I will personally respond. No kidding. I do it every day in the evening. Now, the biggest question everybody has right now, are earnings going to impact the stock market? How are they going to impact the stock market? Why we rallied yesterday? And is this rally the beginning of something new or not? So I'm going to try to answer all of those questions in today's video. First of all, just to give you an idea, and what I love to see is stock market analysts always love to give a reason for why. Profit taking, analysts. It's interesting. Yesterday, they didn't have anything to say. They said the CPI was worse and the market rallied, which is really weird. You honestly hardly ever hear things like that. The big news today is going to be retail sales. We're hoping it's going to come in positive. As long as it's positive, 0.2, 0.4, it'll be good. But typically, historically speaking, when the market rallies the way it did yesterday, it typically cools off for 3-4 days, just kind of sits there, and then it rallies. It typically closes higher by the end of the week and by the end of the month. But a few days after a major rally like that, the market does have a way of cooling off. Now, a big question is, Roger, are we overdone? Is this it? Well, I want to show you something interesting. On momentum levels, you only had 87 stocks making 20-day highs, and you had 70 stocks making 20-day lows. The number was like 200-something. Now it's 70. The market's just now starting to get some degree of equilibrium. It's not even close to being overbought. It's just now getting out of oversold territory. And put to call ratio confirms that. Look at this. We're still at 90. We still haven't gotten below this level, the real low level, the 70, 60. So there's not a lot of call buying yet. And there's not a lot of big rush to 20-day breakouts. You got 87 stocks breaking out. When it gets to about 500-600, that's when we're close to the peak. Also, the bond market starting to curl a little bit, starting to turn higher, and I'm hoping this will take us back at least to the 110 level on the TLT ETF, which tracks the long bond. Now, volatility, as I mentioned yesterday before the opening bell, appears to have peaked out. It's now moving lower. I'm hoping we'll hit the 28, possibly the 25 level before it's all said and done. But a lot of this is going to depend on the market action next few days. Let's talk a little bit about global economy, and then I'll switch into earnings, because we got bank earnings, which so far seem to be doing pretty good this morning. We heard a couple like from Wells Fargo, they top revenue, United Healthcare top revenue, but I'll get into that in a bit. Let's talk a little bit about global economy. So markets surged Friday overseas, which is great, after a rebound from a slump caused by higher than forecast inflation numbers. Look at this. Tokyo jumped 3.3%. Biggest one-day gain in 7 months. That's really bullish right now. We need global economy to start coming up. Crude oil rose almost $2 a barrel. We probably see some of that impact today. Now, on Thursday, after the U.S. Consumer Price Index rose 8.2%, which is better than the peak, but core is still not good, and I'll talk about that in a minute. The S&P rebounded 2.6%, the biggest daily gain in 2.5 years. But again, we're still way below the 200-day moving average, and this is still a bear market rally as far as I'm concerned. But this is a great move in the right direction. The fact that we blew the CPI, that we shrugged it off, is good. Thursday CPI report showed inflation is spreading more widely across the economy. My hope is that the market is starting to assimilate it and is starting to look past it a little bit. Because if we rely on this Fed, we're not going to get very far. The CPI was down from August 8.3% increase, but core inflation, this is what the Fed looks at, which strips out food and energy, accelerated to 6.6%, and this is what the Fed looks at. So they're going to go 0.75. Prices in September rose 0.6% from previous month. That appears likely to reinforce the Fed's plans for more big rate hikes. Most traders already expect a rise of 3.25 points, so that's kind of already built into the market, if you will. Now, real quickly, I wanted to kind of go over a few things with you. Today's stock market movers. So you got BlackRock, you got JP Morgan, closed up more than 5%. You got USB, Lincoln National, Mellon Bank, Citicorp. They all closed more than 5%. It'll be interesting to see how they do today with all of these numbers. Domino's Pizza closed up more than 10% to lead the S&P 500 after reporting record revenue. This is really good, better than the consensus, $1.07 billion. And that's a consumer discretionary company. That's good. Third domestic store compatible sales grew 2%. So things are going good with pizza. Biogen closed up more than 6%. Walgreens closed up more than 5% after reporting fourth quarter sales above estimates. Comcast closed more than 5% after Citigroup upgraded them. So there's been some good stuff. Now there's been some downgrades too. ServiceNow downgraded, Generac closed lower, Etsy closed lower. But we want to see how the bank stocks are going to do today. 291 for JP Morgan expectation. This is what I would be looking at or writing down. Citibank, very important. Morgan Stanley, very important. And I think United Health and Wells Fargo already came out. Matter of fact, let's take a look here. Let's see how they're looking. Oh, look at that, 4%, up 6% this morning. Yeah, they came out positive. And UNH, my favorite bank, my favorite healthcare stock. Ooh, la la, look at that, up $5, up $9. Yeah, things are looking pretty good. How about Chase, JP Morgan? Let's look at JP Morgan. I'm just curious. Ooh, up 5, up another 2%. So far we're looking good. It'll be very interesting how this week shakes out. And I'm hoping, fingers, toes crossed, that this retail sales report, which I'm hoping is going to be positive, anything above 0.2 will be positive. And I want to see ex-vehicle numbers go up as well. Overall, in the broader stock market, you are still seeing financials yesterday, energy, but information technology. But if you look at a 5-day, you'll see consumer staples, energy, industrial. Financial may be sparking up a rally. Also, keep your eye on utilities, because utilities are at a 5-year low and they're cyclical. Look at this. I want to show you this. Look at that. That's what I wanted to show you guys. Remember I showed you this a few days ago and I said expect utilities to turn around. I don't think it's going to go much lower. I mean that. I think utilities are in fact going to turn around. They look like they're doing it. And remember, the bottoms now are lower than before. This is another example. Back in the old days before algos, and this actually brings me to what I wanted to talk about. Algos. Today's Friday. I want to tell you guys something very interesting. Notice here, we bottom out. Look at this. Look at the 5-year. We bottom. But notice here, this low is a little lower than all of these. Well, back in the day, when you were trading support and resistance, the second bottom would always be higher than the first one. The last 15, 20 years with algos trading, the bottoms have been getting lower. See this? 1, 2, 3. Back in the old days, the bottom would be like right here. The low would be here, the high would be here, and the bottom would be here. What these algo guys do, these scrupulous algo guys, what they do is they bring the market lower and stop out all the stops here and then take it out. So now, over the last 20 years, one of the biggest shifts that occurred is when you're looking at 1, 2, 3 patterns, the old Ken Roberts 1, 2, 3, or double bottom, the second high, if you look at your old technical analysis books, they want the second bottom. This is the first bottom, that's the top, that's the second bottom. They always want the second bottom to be higher than the first one. Now I've noticed the opposite. The second bottoms are going lower, and that's because institutional algo traders are taking the market in that direction before popping it up. I'm seeing the same thing in utilities. That before the second bottoms would be a little higher. Not anymore. They're always a little lower. See, 1, 2, 3, lower again. This is a very, very, very big fundamental structural change in the market. And I'm telling you, it's due to algos. Algos want to run these stops, so they run them lower, stop out the retail traders, and then bring the market higher. So now the second low, 1, 2, 3, or double bottoms, the second bottom is lower than the first. That's a very, very important algo lesson. I wanted to explain to you exactly what's been the changes that's been taking place in the algo world. Now, again, typically after a historic move like we had yesterday, I'm expecting choppiness for the next few days. Also, we have the retail sales, but earnings can persevere. Let me give you some levels. We are now near the 30,200 level. The next level up that I want to see us break the 33,000 level. I really, really want us to break the, 30,300 level, which is just a couple of points above us. And then the next level is 3,100 or 31,000 on the SPY. On the Dow, on the SPY, that level is 378, 379. That's what I want to see. Now, again, don't expect a huge rally today. The next few days may be just very kind of markets balancing themselves out. Again, there's not a huge momentum shift right now. It's 87 to 70. It's very choppy. So the market is not out of sort. Basically, yesterday put it back into balance from being so grossly oversold. There's a lot of firepower to the upside, folks, and we may be seeing it over the next few weeks if earnings continue to be better than expected. And I will be back in my VIP room on Monday as usual. Today's the last day of our intro to algo, and please post comments below this video. If you have a question for me and I'm not answering it in the VIP room, I will check those videos and I will respond, I promise. Or send me an email, support@marketgeeks.com. Now, I'm reopening enrollment in a very, very special class, a virtual workshop where you'll learn how to assemble a portfolio and exactly why this is so important. I'm going to teach you about the core factors behind front-runner stocks, the selection process, portfolio management, and the best part, I'll teach you how to build your own custom ETF. This is very, very cool. I mean, really, really cool. Now, this course will give you full autonomy over your money, taking your trading skills to the next level. Now, I know you're going to love this workshop. It'll equip you with the best trading tools for your career. So click the link below. Get all the details now. Do it now. Don't delay, and have an amazing weekend. I'm going to go to Tampa to visit my daughter in school. Bye, guys. Have a great, great weekend.